Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to Wednesday's May 10th edition of Benzinga's PreMarket Prep. I'm Joel Elconin here with a special guest host, Nick Shaheen. On today's show, we have a couple other guests to interview. Tom Asprey, trader and analyst and a veteran of technical analysis, and Bruce Marshall, income trading specialist for Simpler Trading. Getting into the preview of the show, we're going to talk about the strike at Spirit Airlines, many earnings, a potential merger in the play here, a takeover with Abercrombie and Fitch, and maybe get to some positive top-line results for Array Pharmaceuticals. But before we bring in our special guest host here, I have a big announcement to make, and we have a new listener to Benzinga's Pre-Market Prep show, and also Dennis, our co-host, is added to his position in life. He had a new baby girl yesterday, 7 pounds, 15 ounces. Natalie Evelyn was born yesterday, so congratulations to Dennis. He is probably in a fast market right now taking care of those kids, but congratulations to Dennis. He should be back tomorrow. Real quickly, the S&Ps are down 250, 23.90.75. Find support in the same areas we did the last 2 days at Monday and Tuesday's lows, 87.50. That's your pre-market low. Crude getting off the mat here, up 43 cents at 46.41. Gold positive by 7.30, and I will discuss the silver chart here in just a second. But Nick, good morning to you. We missed you yesterday, and now you get to be on for an entire show.
I thought I was going to have withdrawals for about a week, but I'm going to get my fix today. Totally excited for this.
Okay.
It's going to be a fun one.
Yeah, you got a lot of great information. Before we move into some earnings, I just want to talk about this silver chart. You and I were talking about it yesterday. And basis the silver futures contract, look at that. 16 out of 17 down days here. I was kind of hoping for that 16 even level basis the silver futures. Nick, you've been nibbling it all in this precious metal.
I've been debating entry, and I was going to look into some credit put spreads, maybe sell puts down below and further out in time. I haven't done it. Same contemplation I was doing for gold as well. So you mentioned the long time of the long descent that I think hasn't happened much often in history. Somebody else was talking about that. But it's definitely attractive from a sniping an entry, at least a starting entry. So you can't go too wrong after a drop like this.
So why wouldn't you just buy calls, Nick?
I could. You know, if I wanted to go long, you know me, I'm not a fan of buying much. I'd rather sell and wait. But you could either buy a call or a debit call spread. But if I do those, you know me also, I like to give myself time to be right. So I don't mind paying a little extra to go out in time. So instead of buying this week or next week, I'll buy, say, June, somewhere around that, the expiry. I can sell put spreads, or I can do both. It depends on how aggressively bullish I want to be in that.
And the thing about the put spread is you don't necessarily have to be right. I mean, if it just kind of stays there and goes nowhere, then you're collecting that premium, correct?
That's right. I don't need it to rally to make money. All I need it is not to fall to my level. So as long as I'm selling behind some proven levels of support, then I'm using the value of whatever I'm trying to invest in as a method to generate income for myself.
All right. B. Morris, I mean, it all depends on what platform you're on for the ticker for silver futures. On Thinkorswim here, it's /SI. On my TradeStation platform, it is at SI. So really, it has to do with the platform that you're looking at. Nick, Let's move on to some earnings here. The House of Mouse, Disney. Now, on the surface here, this report that came out after the close, it looks like an EPS beat here. Estimates at 141. They came in at 150, so that was a little bit of upside surprise. Missed on the revenue a little bit here. Maybe just this whole overhang with ESPN and what to do there. I did hear on the sports radio that they paid triple the amount for the most recent NBA contract. And as you all know, this so far the NBA playoffs have been a dud until we get to Golden State and Cleveland. But give us your thoughts on the House of Mouse here after this earnings report.
Well, there are a few things that no one can deny. It does have assets. Their movies are well liked, and they put them to work well. So it's just a matter of price action, in my opinion. The fundamentals have not really changed much. Whatever was going on a few months ago is going on now. So that ramp all the way up to 115 was based on what? It's just a meme. Everybody trading the same thought. And we noted a break of a trend line up at somewhere to 114.5 area, and bought puts on that and got out. And then I said, if the other trend line breaks, which I also posted on the chart, which is around 110.5, there might be some downside. Now, last night, the range from the open interest, the price range that happened overnight is exactly within the range of the open interest. So the market was expecting this move. By market, I mean where the open interest lies. So everybody's money in the options for this week was within the price range now is within that expectation. So there's no surprise so far. What happens from here is important.
All right, so I got Nick's chart up there indicating his thoughts on the issue. I got a pre-market low on 108.32. You got a nice bounce up that to the 110.5 area. Currently trading at 109.35. So as always, that pre-market low is of some significance. Let's look at the daily chart. You had a spike down a few days ago, and that's actually where we're trading at right now. So your 4-day low of 109.06 could still come into play here. Below that pre-market low of 108.32. Boy, oh boy, you're getting into some levels here you haven't seen in quite some time. I don't know. I wouldn't get too upset even if this went down to the 108 level. I see a double bottom, 107.98 and 108.15. All right, let's move on to our second earnings report of the day. And going from bad to good, Electronic Arts. Let me pull up the numbers here for EA. Nick, are you a gamer?
I used to be an avid gamer. If I had an extra few hours of my day, I would definitely revert to it. But I have not gamed in a long time.
Yeah, okay, I haven't since Asteroids and Pac-Man, but anyways, a dime beat here, 85 versus 75, so that was a nice upside surprise. Revenue pretty much in line here for EA, and now I will get my chart up here for Electronic Arts. Nick, what do you play this one at all? I haven't ever heard you really mention this stock.
No, yeah, I can't chase a chart that looks like that. It's too good for me. So I have not tracked it. So up and away. So whoever is long it has no reason to sell. It dips.
What about if you're long coming into this thing? You have any words of wisdom?
Well, I never like to stay too long for especially when markets in general are at all-time high. So if the markets decide to correct, of course, that's sacrilege there. I will wash my hands and mouth after I say this. But, if I'm long this, I would stock replace. What does that mean? It means I book my profits in the stock, and if it's an optionable stock, then I'll replace it with a lot cheaper calls. They can be long in time, but then there'll be less money on the line with profits in pocket. So I can still participate in upside if the stock continues to rally because I'm holding the calls.
All right, pre-market high. We just hit 105.03. We've backed off $1. blows away the former all-time here. The former all-time high was actually made in 2 days ago at 96.49. We're way above that. So if you're trying to take profits, and just be cognizant that your pre-market high is 105.03. I'm not sure what kind of options premium they built into the options here, but keep an eye on 105.03. All right, one of the most talked about stocks on this show actually earlier in the year was NVIDIA. And we talked about stocks going opposite directions, off reports. AMD didn't have a great report, but boy, oh boy, NVIDIA did, blowing things away. Let me give you the actual numbers for NVIDIA here. But I didn't realize how hard of a job Spencer has in pulling up all these earnings reports. A big beat here. The street was at 67 cents. They came in at 85 cents, so they blew that away. A good revenue number, 118.45 is your pre-market high. We backed off. I know the all-time high is back over 120. Nick, you've talked me out of buying puts on this thing. I don't know how many times, but you never convinced me to buy calls here. So what do you think? Is this the time to maybe take some profits if you have some calls in this issue?
Well, anytime I revisit a high, I have to look at the chart to see how it fits within the technical picture too. So technically, the spike was available for the bulls to take it, and they are taking it this morning. So if I'm riding it, I would definitely again book some profits and replace it with a different trade that would participate from here on up. I don't want to overstay my welcome in anything. These markets are fickle, and you never know what's going to go on. It is a good company. The way I see it, all of these companies are going to make money. Our life is becoming more digital. We're going to need more brains, and these guys supply the brains or pieces to it. And there's plenty of time, plenty of room for all of them to actually succeed in the long term. So no reason to short it. But if I'm long it, I'll book and replace with a different strategy.
All right, that we mentioned the pre-market high in the 118 handle. Now you got to look at the all-time highs in this. It got up to 120 a couple different times. I know Andrew Leff knocked it off its perch knocked it off once, and then the analyst ganged up and on a few times. First time he went up to 120, hit 119.93. The second time, I believe that was on earnings report too. It went up to 120.92, so there's some levels to keep an eye on here. All right, Nick, now we are really going to go to your wheelhouse here, and we are going to bring on Priceline. PCL.
Never heard of it.
And you know what, Nick? I was looking. What do we got Priceline here? We got it trading down $53 at 18.58. And I looked at the puts in this. I'm thinking, okay, I wonder what the 1950s were going for. So if you called the correct move on this one, you bought the 1850 puts, you're losing money because I think they wanted.
There's no way you could make that work. I looked at it yesterday. I wanted to participate, and I was looking outside the box. I just couldn't make it work. It's just insanity. The prices they wanted for it. I mean, I went up like 2,000 points and I still couldn't afford the options on that one. So the best way I do this, and this is not for the faint of hearts, is you sell puts and calls way out in time with 30% plus or minus buffer. I just posted a chart. If you look at that circle, I had an iron condor going in that circle. And believe it or not, I collected $5 for it. And the maximum loss, which is half of the maximum potential loss. And it worked out perfectly. But it's not for the faint of heart because you see the upper side getting tested so hard. But I knew that, hey, I'm collecting over $5 to open it. I might as well stay in it. That's the only way really to trade that. It's just for, if you're trying to trade it. If you're investing in it, obviously the buy and hold is the way to go with this one, but not at all-time highs.
All right, 8:14 here. We got through a few different earnings, but it's time to take a break here for our first guest. And he's a veteran of technical analysis, and his name is Tom Asprey. I think he was on CNBC not too long ago. So we're going to take a quick break, and we'll be back with Tom. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm your co-host, Joel Elconin, with a special guest host, Nick Shaheen, today, and we have a veteran of technical analysis on the show. His name is Tom Asprey, professional trainer and analyst, was former senior editor for MoneyShow.com. He's been writing about the financial markets for over 30 years and provided advice to institutions and individuals. Tom, how you doing on this Wednesday morning?
Very good, Joe. Thank you very much.
So how did you, over 30 years ago, how did you get interested in technical analysis? Was it a book? Was it someone you were following in the markets? What originally sparked your interest?
Yeah, it was several books. My father was quite an investor, so he bought Granville's early books. And actually, I don't know if you ever heard of Jim Dines, who was an early technical analyst in the 60s. He used to subscribe to his newsletters. And I was originally a biochemist, and I was doing computer analysis of protein structures and decided that I might want to try to do computer analysis of the financial market. So that's how I really started. I actually input a lot of data manually from Barron's. And, as software became available, started looking at the various indicators, most of which, were back in the early 80s were available, but not used. And now, of course, they're much more popular.
All right, so moving into some of your charts that you have up here. Everyone's looking for a reason to sell this market, looking to call top here. And I know you have your different indicators, your way to look at the market here. And you're looking, I got the chart here of 1987 here, the composite weekly and the bearish divergence. Explain what our listeners too are looking at in this chart.
Certainly, Joe. Well, the advanced decline line is one of the more important indicators for me for determining the market trend, and I look at it on a daily, weekly, and monthly basis. So, in late February of this year, the investors' intelligence sentiment levels hit a high that they hadn't seen since January of '87. So, of course, many people say, wow, it's 1987 again. So I put this chart together to show that the AD line, after that high in sentiment, of course, the market continued to go up for about 8-9 weeks. And then, we had a correction, but when the prices made a further high in September of '87, then the advanced decline line made a lower high, that line B, which indicated that at that point there were fewer stocks pushing the market higher, which is a sign of weakness. And subsequently, the AD line broke down there, like 5 weeks before the market collapsed in '87. So I use the AD line to determine, both the monthly, weekly, and daily health of the market, depending on what, my clients are interested, whether they're short-term, longer-term, or, major trend investors.
All right, let's move on to the next chart here, and I'll move it over there for our folks. Just give me 1 second here. All right. And what are we looking at in this one? Here we have the spider, and this is over the New York Stock's advanced decline line. Explain to us what we're looking at here.
Right. We talked earlier, before you see a major top, going back many years, you'll often see a longer-term divergence between the AD line and the price averages. So in '87, there's a 0.2 on your chart. That was the ultimate high in the advanced decline line based on both a daily, weekly basis that was made in June of 2007. The market then made another new high in July, that 0.3. And when the market was making its final high on October 10th, I believe, it was much lower at 0.4. So as the market was moving higher, fewer stocks were pushing prices higher, which was consistent with a major top. That's what I would expect to see before the next bear market occurs. And currently we don't see that. So you see a divergence that lasts, 4 or 5 months, then that's a pretty strong warning that the, prices are in a danger zone.
All right, bringing up the next chart here. Let me move it over. Kind of similar here. We're going with this little bit more updated, the Spider Weekly here with the S&P Advanced Decline line here. Please give us your thoughts on this diagram.
Sure. I do monitor all the available AD lines, so that's pretty much the NASDAQ 100, the Russell 2000, the S&P 500, the Dow Industrials, as well as the NYSE Composite, which is the most broadly based. this chart shows that, after the collapse in prices we had in early 2016, the AD line formed a divergence, that line C on the chart. And then when the AD line broke through that resistance at line B, it was already moving above the highs that we'd seen in late 2015. So it was acting stronger than prices. That's the most bullish environment. When you see the AD line is moving up faster than prices, that's a longer term positive reading. And of course, at that point the S&P the spider was just under 200. So we've come a long way since then. So that was a sign to me that, the market was going to move higher in 2016, and, bullish strategies were favored.
Hey, Tom, I have a quick question for you. This is Nick here.
Sure.
These are great
Hi, Nick.
Charts, and hey, I have a question on the Qs charts. I see and I understand exactly what you're saying. How does that is that mirrored by the small caps? Because these guys, the Qs have mega caps that overweight it, and if one or two stocks of the top 5 moves, they move the whole index basically. You see the same things in the say IWM, for example, with respect to advanced decline. Okay.
Yeah, not currently, Nick. It's generally, I think we might have a chart coming up. The Qs, of course, have been the leader this year. Their AD line made a new high in December. We had that late drop at the end of the month, but the AD line suggested that the Qs were going to be a leader as we came into 2017. The AD line there looks much stronger and has for all year than the Russell. The Russell, that chart can show that 0.1 was the new high, and that created a very bullish environment. And the AD line on the Qs made a new high last Friday. The Russell finally broke out over a week ago in its AD line, but it has been lagging. So I do use the variations, between, oftentimes they'll move pretty much together. Sometimes they won't. So right now the Dow AD line looks the weakest. Then the Russell, and then the S&P. The New York Composite and the Qs both look the strongest. So you will see, if you remember in 2015, we had that the market was just the FANGs were pushing prices higher, and it was a fake out before we had that sell off in late August of August 24th, that collapse. The AD line was not making a new high. It was diverging, even though the market averages were moving higher, based on the strength of those big cap tech stocks. So it'll often point out, when there's trouble ahead.
All right, I do. You guys went right into the triple Qs here, and I do have that chart up here. Also with the AD line and the triple Qs. Get your comments on that, but also, Tom, I wanted to ask you. I mean, you would have to consider these lagging indicators, right? I mean, you get your information at the end of the trading day, at the end of the trading week, and then you make your analysis. Some indicators are, kind of forward looking. Just discuss the characteristics of kind of this being a lagging indicator.
Yeah, well, I actually, Joe, I would disagree with you on that.
Okay,
one,
go
I think
ahead.
they're really a leading indicator. If you can compare what happens, oftentimes you'll see the AD line make a new high, on a weekly basis, 2 or 3 weeks before the prices will. So that's, and I, having followed for a number of years, so you can use it on any time frame. I mean, last Friday was a great example. We had a great jobs number. The market really didn't do anything, but those intraday traders, I said, well, watch the advanced decline numbers. All day, the advanced decline numbers were 2-to-1 positive. And then we got that last surge. And I had one of my, somebody asked me in a tweet, like, so how did you, how could you pick up that late surge? And it was like there were twice as many advancing stocks as decliners going to the last hour of trading, which really favored the upside. So I think if you look at the trends in the AD lines, you'll find oftentimes that they act stronger or weaker than prices. In the bear market of, 2008, the AD line was acting weaker than prices. So when prices would move up, there would be, you'd have like a 120-point rally in the Dow or, 15 points in the S&P, but the advanced decline numbers would be negative. So that was telling you that it really wasn't a healthy market.
Do you look at intraday, the tick or the trend, TRN? Do you look at those indicators at all?
Both of those, and particularly, I've written articles about, panic sell-offs. I mean, there've been particularly I look at the closing level of the trend in particular. So when it gets up, 2, 3 or so, it's often, it's when sentiment is going like everyone's worried and they're buying puts, and that's really something you shouldn't do when that trend is that high. The tick, you'll see some similar divergences. In other words, you'll see a low, ticks minus 500. You'll see a new low, hours later, and the ticks will not be as low. So they might be only minus 200. So you can look at those sort of divergences and say, okay, that's telling you even though prices are lower, there are fewer people selling, which suggests you should be looking at the other side of the trade.
Okay, yeah, Dr. J, the AD line, Tom is telling us, is a leading indicator. All right, our final chart here, the power, this is the triple Qs here, and I'm going to move it over, and you have a higher highs, and you have your indicator here. So drawing a trend line off that last high is, where's your projection here for the next move in the triple Qs?
Yeah, it's been pretty impressive. That new high that we made at the start of the year shows that it's really been. And you were talking about a leading indicator. It broke out again in October. I think it was April 21st when it broke. I look at the AD line. I don't like a price chart, so I look at trend lines, support and resistance. So you can see that in early April there was like a couple of lower highs. So we broke through that. AD line continues to look strong. Clearly the chart is overextended. I'm sure you gentlemen follow pivot analysis.
Mm-hmm.
Interesting that the yearly pivot projection for the Qs is at the R2 is at 138.99, which I find quite interesting. And if you look at the yearly pivots, for 2016, many of them were spot on, even in the Russell, which had a rough year. So, I think it's extended. I mean, it could run to 41, 42, but up in here it's a little, overbought.
All right, we've been on the line with Tom Asprey. He's a professional trader and analyst. Looking at some charts, advanced decline lines that we really don't touch on too much of the show. Tom, great information, and we'll be calling you back soon so you can pick the top in the market for us.
All right, Joel. Thank you very much, and nice talking to you, Nick.
Talking to you too.
All right, great information there, Nick. I mean, I done some advanced decline analysis. Is that something that you fit in too much into your repertoire, just to get a feel for the macro?
I mean, you can't deny it looking backwards, but I don't know if I'll be smart enough to pick it in the moment because it's not what I do. I'm sure he concentrates on it, so he's up to speed on it. But I do have a lot of friends who send me charts every day, and at least one or two of them have it on there. So I'm keeping an eye on it by way of somebody else's efforts. Let's put it that way.
What an exciting group of friends you have there, Nick.
I know, really, but I'm lucky that I know people like you and like the
A little bit, but We are back now, but I don't have my chart up here, Nick. So maybe you can start throwing some charts in there for me as
Sure.
well.
I can pick up on Fossil, for example, if you want to move off of Yelp, a new low, and that's probably what I could say, and that's about it. Whether, it trades like the VIX with no respect, really. Is it for good reason? I'm not sure. I'm not an expert. But really no need for a chart there. It's just down, down, and down. So there were some few exciting names out there. So
I
there's
I do got the fossil chart up here now,
Oh,
so
okay,
let
good.
me just see if I can get you the numbers on fossil. Boy, just made a low at 1393, and the thing about this is it's not getting much of a bounce. Let me take a look at what they gave to the street. Fossil here, a penny miss. They didn't like that. Revenues missed by almost $10 million. 1393, that's your pre-market low, currently trading at 1415. Man, that's a new low. That's a new all-time low.
Yeah.
Remember when, and I probably said this on the show a few times before, when this stock was pretty close to its all-time high? Do you remember Bubba Watson? And what did he win?
Yeah.
The Masters or something? And he was wearing that pink fossil watch. And that, boy, oh boy, if you would have used that as a contrarian indicator, I think that was in 2013 when he won the Masters. It was a $130 stock. I mean, let's see if we go back a long ways in fossil. I don't want to say $10 on this because this thing's already getting beat up pretty good. But we're back to levels we haven't seen since. The financial crisis in 2009. It had a low at 1122. All right, 833. So we could probably get one more earnings report in here, and the old. Let's go to AAXN, the old taser. Let me see if I can bring up the report.
No, AAXN, is that Taser? I thought it was a bio or something.
Axon
never mind.
Enterprise.
Oh, Axon. Yeah.
Yeah. Yep. Any thoughts on this issue?
Sure. It's technically interesting. I think it's popping. Trend line could spur some buying if they breach, and it's a pivot area too. So if somebody plays technicals or if somebody knows it as far as fundamentals and why they're chasing it, it could be something that they can play. I used to trade Taser via the stock, but that was like a decade ago, if not more. So I haven't touched it since then via the options.
All right, let's see here. You got a pre-market high of 26.58. We're really not backing much off that level. Probably have to go a little bit longer term out. I mean, if you're really hanging out for some profits, your February high was at 27.56. All right, we are going to take our second break of the day and bring on our second guest, and that's Bruce Marshall. He is from Simpler Trading, and he's an income trading specialist. So we'll be right back with Bruce. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Alconin, along with special guest host Nick Shaheen, and we have Bruce Marshall on the line, income trading specialist from Simpler Trading. Bruce, how you doing today?
I am doing fantastic.
All right, so here we are on the Wednesday. We had the S&Ps in the red a little bit more than we are now. Now coming back, trying to go green on the day. But Bruce, we have you on to talk about income trading here, and I believe last time we had you on a little bit of time ago, maybe it was a little different interest rate environment here. So just give us your take on what the Fed has done so far this year, what to do for the remaining of the year, and how that's changed your trading income strategies.
Absolutely. Of course, it's been a fantastic trading, really, all year with the S&P. I trade primarily in indexes anyway, but with the index being up, I'm talking about the ES and the NASDAQ and the Russell as well.
Okay.
Where they are at this point, we've got such a low volatility environment. It's really opened up a lot of opportunities, for traders. So I'm trying to use the volatility to my advantage, and of course I'm watching the Fed as we go and all of the other events, that have happened, the French election and so forth. Payrolls, etc. And again, it's been very good trading, kind of riding this wave up. And the question is now, where do we go from here?
Bruce, can I interrupt you for 1 second? It's traders, sure. Some traders like me and Dennis and maybe Nick, we kind of prefer a higher volatility environment, a little more price action. But you're talking a low volatility. Just mean it's it's easier to get in positions and maybe take a larger position because the market's not moving as much and not getting many shakeouts. Describe us, tell us how you're taking advantage, or what are the advantages are to you for the low volatility environment.
Sure, absolutely, and you're exactly right, because normally. The kind of layup trades are when balls are a little bit higher, as far as options trading, I'm doing, big iron condors and selling premium credit spreads and things like that. But in a low vol environment like this, we just hit, we're under 10 in the VIX now, which is, we haven't done that in 23 years. So we are, we're in the basement as far as balls are going. So kind of flip it around and go the other way and say, I want to be buying that volatility. And you can do that in a lot of forms, but I'm favoring really long vega trades to try to catch a rise in volatility.
Okay. All right. So let's go back to the Fed's actions here so far this year and looking forward.
Exactly. Of course, the Fed has been the last Fed meeting was kind of a snoozer, I guess, a little hawkish language, but didn't seem to affect the market. And that's, I think going forward, obviously they are, data driven. I think we will actually see more hikes than they are saying or the public thinks, I believe, this year, or let's say in the next 12 months, not maybe this calendar year. So, I could see some more, volatility to the downside, in the S&P because of that. If we get, something unexpected. Right now, I'm watching the bonds as well, and things are, things are on track. It's just kind of calm waters, I guess. Right now, it's the best way to put it.
So, do you think, just, look at the overall economy and the numbers that are coming out? You think that, that the economy and the markets could withstand, more rate hikes than what's currently being predicted?
I do. I think that right now the Fed is, they are following the script, and as long as they stick to the script, this is what we're going to do, and the market, I guess kind of anticipates it, I think we could absolutely go, continue to go higher. it's the surprise, curveball that that obviously the market does not like. But rates are definitely going higher. Unemployment, I'm watching payrolls pretty closely and things like that. Unemployment, and so far everything is kind of slow and steady as far as the Fed goes.
All right, and looking at the bond market here, looking at the TLT, boy, just had a pop. Actually, that the low that it made at 116.49, that I believe that was just ahead of one of the rate hikes, and got a nice recovery here. 116.49, close to the 125 level here. TLT looks like just holding this 120 level. Could you give us any technical levels for the iShares 20-year Treasury bond ITF?
Yes, I mean I'm looking at it, pretty closely. I don't really trade the TLT that much.
Okay, more the bond.
Well, I'll trade the futures if
Okay.
I'm going to trade the bonds. But obviously I watch it. It's very important to watch the bonds to tell you where the market's going to go.
Okay.
But that being said, there's two things, and I don't know why over the years I've been trading professionally for 28 years now, and I don't trade the VIX itself that often, and I don't trade the TLT itself that often. I watch them both, obviously, very closely, but it's a little bit harder. It's easier to jump over the futures and trade the bonds.
Funny you mentioned the VIX along with the TLT. It's Nick here, by the way, because the TLT, the bonds are really my new VIX. It's really the better gauge for volatility and market nervousness these days than the actual VIX. Like yesterday, we had the VIX green when the markets were also buying the frothiest names out there, like up 4 or 5% on Tesla, etc. So watching bonds will tell you really if the market is nervous or not. It's still the run to safe haven trade in the day where we have like massive trouble. And by trouble, I mean minus 0.2% on the SPX these days is trouble.
Right. Exactly. It's so funny you said that. And hi, Nick, again. You're exactly right. I mean, you watch the bonds as an indicator, and I kind of pair those up. Obviously, I'm watching the VIX and the VIX futures, but watching the ZB and some of those futures, and I'm talking about pre-market to give you an idea. But again, kind of going back to TLT, a little bit harder to set up trades there in general, and it's hard to trade the VIX itself. You can trade the UVXY and the SVXY, kind of as a surrogate, but those are really good gauges to watch to give you a good idea of what is likely to happen.
All right, Bruce, we've given you all the easy questions. Now I'm going to give you a tough one here, okay? All right. Dennis and I, both with our long-term investing, we like stocks that we get paid to wait. And, different stocks, AT&T, Verizon, Procter & Gamble. There's a lot of stocks out there with some pretty attractive yields. Now, the ones with 7, 8, 9, and 10%, you got to be a little bit worried why they're paying that. But, just give us an outlook. I mean, theoretically, in a rising interest rate environment, these stocks are going to be out of favor. I mean, I don't know where you're going to get a return on AT&T in any kind of instrument, but just looking like at AT&T, and I think Dennis likes to look at the PFF here. That's been holding in here, but just give us your scenario for some of these higher yielding dividend stocks.
Sure, absolutely. And I'm with you there. I manage several portfolios, and in one of the larger ones, I am buying the dividend stocks, and I do covered calls and cash covered puts and things like that. I am, believe it or not, I'm starting to dip my toe in the oil sector, buying a little BP. I think there is some pretty good potential there. And even the larger names, the Exxon Chevrons, really nice yields. It is obviously dependent on oil, where we go. But if you're longer term, I think there's some pretty good opportunity there. BT, for example, 6.9% dividend. I mean, come on, that's about as good as it's going to get. And we're trading at not a 52-week low, but we're pretty down there, and we're past earnings. So just an idea.
Okay, good one.
And I kind of shift gears a little bit. I'm looking at. I've actually got some pretty decent position in Kroger's, the grocery store. Kroger's is the top contender to take over. The rumor is, or the speculation is, Kroger's may take over Whole Foods. I don't know about that, but I like Kroger's. It is kind of an inflation play as well. KR doesn't have that. It's got a 1.65% dividend, but a 1.65% dividend with a 5% potential upside is pretty interesting to me. And I have been playing the defense names, the Lockheed Martins, the Boeings of the world, kind of as well, but those have already kind of missed. Those have already made their move. I actually have taken some profit in some of those. But I totally agree. There's still long-term opportunities out there, because most people get focused on I want to buy Tesla, and Priceline reported today, and and Amazon, all that kind of stuff, which is great, but it's a different it's apples and oranges from the long term. To me, I want to get stock with a decent dividend, and I'm not worried about what it does on a day-to-day basis.
One more I'm going to throw at you here that has a little bit of a yield, seems absolutely going nowhere. Near and dear to us in the Motor City. Any comments on General Motors?
I do from time to time. I do a pairs trade with General Motors and Ford. It's got a 4.4% dividend. I have not been aggressively trading it or holding it. I think it's probably fine. But I tend to look at sectors overall, and I would group, General Motors, Ford, Toyota, GM, and even Tesla. I throw Tesla in there too, as an outlier. But we are past earnings on General Motors. It's probably we're trading right at the 200-day moving average on General Motors. I would probably be pretty comfortable, either buying stock maybe for a covered ride or put credit spread or something here. It's on my list, but it's not on my short list.
Okay.
They do have a dividend. The ex-dividend is coming up on June. I think it's June the 7th or 10th or something like that. And again, that dividend is
nice.
38 cents. So it's pretty nice.
Can't get that at your local bank, right?
Right, exactly. 4% dividend on something that's pretty solid is nice. Got to have a little longer term view on it, but that's okay. You can do the exciting stuff while you're waiting.
Exactly. Slow and steady, talking Nick Shaheen's language here with credit put spreads and credit call spreads. Bruce Marshall, income trading specialist for Simple Trading, joining us here on Benzinga's Pre-Market Prep. Bruce, great to talk to you. Hope to have you on again soon.
Thanks, guys. I really appreciate it. Good to talk to you guys again.
All right, let's move on, Nick. Let's get away from the earnings a little bit and talk about the flavor of the day, and that would be Abercrombie and Fitch. Some news out yesterday that this was after the close last night. They're working with Perella Weinberg Partners to handle takeover interest. Now we got to pop up to 15.15.
Whoa!
As things fade, though, here it looks like we got some people booking profits. We're a buck off that level. The way I tend to look at these things, Nick, is when these rumors come on and you buy the pop, you kind of like to see some kind of a confirmation of a deal or at least a potential suitor. Nothing as of yet, but then again, you just got Kate Spade taken out for, I don't know, I don't think much of a premium. It's certainly not as much as the street expected. Nick, I know you threw a chart up there. We'll let people bring it up at home, but your thoughts on A&F, a retail store?
Right. Well, retail is now back in favor, at least for the few days. So I can't chase it. If you're not already on board of this, I'm mad enough to say I missed it. I'm not going to chase it. So getting in at 15, in my opinion, is a pretty good gamble, a pretty big gamble, not good gamble. So yeah, definitely not for me. This is where you have to step back and really evaluate the conviction of that headline. Oddly enough, that area is past platform from say way back in late of 2016, and that was a resting point before it actually collapsed down to these low levels of 11 or so. So yep, if you're not on board, you missed it. At least that's what I would say to myself.
And if you're looking for it to come back to the original level, I know it's another strategy Dennis and I, talk about. It was hanging out at $13. So somehow, if we drift back down to that $13 area here, maybe we'll see some interest. I believe Wendy's was supposed to report this morning. That's a lower price stock, and if it's doing anything like McDonald's here, we'll see what their report. They had a penny beat, a little $3 million better on the revenues. Guidance, don't you love this, Nick? Street estimated 46, but the company sees adjusted EPS at 45 to 47. Doesn't it really
Perfect.
help? Doesn't it? Comps
Perfect.
are up 2 to 3%. Adjusted EBITDA 400 to 406 million. Boy, they're no McDonald's for that point. Any comments on a lower price stock like, ooh, Wendy's is $15 now. Where have I been on this one? Holy
Yeah,
mackerel.
well, it's had a nice run. I mean, this is one of those, I call them THTH. It's too high to chase and too hot to short. So, but we just talked about low volatility. So if the puts are cheap, and if you want to short something like this, if you think it's overextended, I'm not saying go out and short it, but buying a put, it doesn't going to cost you much. And if you buy a put spread at the money out in time, then you're really renting the right to short it. And if it falls, then you have a chance of doubling your money. That's really the only way I would play this. If you're not on board, you kind of missed it. But from here, I'm not pressed to chase it.
And what is your favorite burger place? Or are you not a burger guy? I know you're out there in California. You like one of these health food nuts, organic eaters, eating that kind of stuff.
I am an equal opportunity guy. I eat everything that's in front of me. So I don't eat burgers in the same sense of burgers. Like if I go to somebody's house, I'll eat a burger, but I'm not a fast food burger guy. If I go to fast food, it's probably going to be like Del Taco or Taco Bell or something like that. But
Taco.
I'm not a foodie, that's for sure.
All right, we got a big report after the close here, and first report as a public company. Snap had a big run. Let's just look at the longer term chart here. Longer term for as long as it IPO'd here. Boy, it was hot off the IPO. Went to 29.44. Gave those gains back very quickly, had 11-point break, so 5.5 on that. Takes it back to like 24.5 area. I don't know. How are the odds? They getting any liquidity here in the options, or are you tempted to play this one off its first earnings report?
I will do. They report tonight. If they do, I'll do homework to see. I have not done homework on the open interest.
Okay.
I didn't anticipate needing to, but I will, and I'll be tempted if it's cheap enough. It is tight technically, so there is action off of that. A break of either side will carry through for a little extra. So if it's cheap enough to buy a spread somewhere, I'm not going to sell any options into the lottery ticket, but I don't mind spending a few pennies. Unlike Priceline, these should be affordable, so we'll see how they look.
All right. Also, after the close, Whole Foods and holy mackerel. What a rally, almost a 10-point rally here. 37.33 has been the high of the move. I know this had $28 or just under in a 28 handle. We talked about this. I think on the monthly chart, it's always good to look at longer time frames. Look at all those monthly lows from 28 to 30. You didn't catch it there. now rumors galore. Kroger. I mean, if Amazon buys this thing, I think I will like stand on my head in the middle of Campus Martius Park. But anyways, going ahead of the report here, Nick. I'm sure if you're long, what do you think? Booking some profits here, or what's
Yeah,
yeah?
I had several discussions because we traded it via Iron Condor several times, and they said let's short it. It's time to short it. I was like, why would you want to short it? There's headline risk in there.
Exactly.
I don't want to put my money in the face of a headline. So the only way I would trade this, if it dips, I'll sell put spreads in it. But right now it's in a penalty zone. The enemy, you were talking about, it's boring. The reason why it's exciting for somebody that sells spreads for a living is that boring is beautiful when you sell risk. You just want absolutely nothing to happen. You just want time to tick by and make you money. And this is the exact opposite of that. So in the face of headline, it's in the penalty box for me unless it dips.
All right. Also, Thursday before the open, Macy's here, and some of these retailers have got out of the doghouse. Macy's is not one of them. Any comment here? Long consolidation here, under $30. Low the move, 27.72. I guess it would be a tempting buy here if I got to break out over 30. Any comments on Macy's?
Well, it all depends what they're going to say and how they're going to sell the street on the fact of their initiatives going forward. I'm not a believer, but it does have a lot of upside potential just from the respect of room. So if you think it got down to the bare bones now, so the Bears will need a reason to sell it. However, the Bulls only need to give hope to buy it. So I think hope is easier to sell than a reason to sell. So lottery ticket, without checking the open interest, if I were to guess, and this is a pure guess, it should be upside more than downside potential. Just pure guess.
Guessing, which you don't like to do, Nick.
I don't like to do. I like to do homework and then guess. Then it'll be an educated guess.
I read, I don't know if it was over the weekend in Barron's, I think they might have come out a little bullish on this, and they're saying that closing all these big stores is good. I mean, it looks bad in the short term, but, what they're planning on rolling out is, some lower cost, stores going a little bit of the discount route. So I don't know if it will be reflected in this report, but we're going to wrap things up here at 9 a.m. here. S&P futures are down 91.25. Nick, I want to thank you for being a special guest host today. Really helped me out. I appreciate it. I'm sorry I couldn't get all your charts up there, but just have to learn to work this computer a little bit better. Thanks a lot, Nick, and we'll be speaking to you again next Tuesday.
Happy trading, everyone.
Okay. All right. We have Snap, and we have a few earnings after the close. Snap, Mylan, Whole Foods. So keep an eye on your Benzinga Pro news ticker for that. Thursday, we have the Deutsche Bank Auto Tech Conference, and get started in earnest with retail earnings. Macy Kohl's and Nordstrom's after the bell. On Thursday's show, I think Dennis will be back. He may be a little bit tired, but he'll be back with us. And our guest is going to be Chris Versace of Tematica Research. Hope you guys enjoyed the show today. I certainly did, working with Nick. We'll be back with you again tomorrow morning.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.